Welcome back everyone to the Audacious Money Witch channel, where we talk about investing and trading stocks, bonds, and crypto assets around the world. You might be thinking, why crypto assets? Well, Bitcoin and crypto-related stocks saw sharp sell-offs this week over growing concerns about the health of the U.S. economy. Cryptocurrency exchange Coinbase just wrapped up its worst week of the year. It's now in oversold territory. Coin stock has been going down on average 1% per day for 6 weeks without any sort of buying support. In this video, first I will give you the reason why I believe in Bitcoin. Then I will tell you why I just started buying coin stock on Friday, and tell you everything you need to know about the Coinbase Global's business in an easy to understand manner. All I am doing is my own research on businesses I am interested in and trying to help as many people as I can. So if you like my work, please share it with your friends and family if you think they deserve seeing it. With that out of the way, let's talk about why I trust Bitcoin. It's all because of digital money printing to be exact, which is created by the Federal Reserve. Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it, said Einstein. Central banks claim to create money strategically, carefully, and slowly, releasing more money into the economy to make prices rise, ideally by 2% every year. But 2% inflation means the buying power of one cash dollar in your pocket today will be 98 cents next year. Inflation is a far higher tax because on your income, you only pay it just once, but if inflation is 2%, you are paying 2% tax on your net worth every single year. If your net worth is sitting in paper cash currency under your mattress, it will be worth less and less nearly every year.
Over time, your money gets you less. Does Bitcoin? Well, in 2012, one Bitcoin bought you this much pizza. In 2016, this much pizza. In 2020, this much pizza. And in 2024, well, you get the gist. Roughly every 4 years, the future supply of Bitcoin is reduced. So historically, you get more, not less.
It's not just the central bank printing money that is the problem. People are putting their money in the banks, the same banks that created the 2008 financial crisis. So banks are another problem because they create new money out of thin air. Here is how. Because when I put my money into a bank, it becomes digits on a screen. When Ted goes to the bank and he wanted a new Porsche, the bank just gives Ted a loan for $100,000 for that new Porsche. So Ted just got $100,000 of new virtual money in his account. Just digits on the computer screen. There is no silver, no gold, or anything else backing up the new digits in his account. Just Ted's promise to pay it back. This process of loaning far more money out than the banks actually have as cash on hand is called fractional reserve banking. In the UK, 97% of that money that exists is just numbers in the computer system, and those numbers are created by the banks. Banks don't even need your deposit to create new money digitally and start charging interest and bank fees. The entire system is based on trust. Selling bad loans are good businesses until the whole thing blew up in the global financial crisis. Banks of today factor in fines of all of the money laundry and all the rules they break, illegal deals they make under the table into the cost of doing business. We are living in a debt-based system. Bitcoin can take us out of debt.
Get a job, save a little, take out a mortgage, buy a house. Get a job, save a little, take out a mortgage, buy a house. Get a job, save a little, take out a mortgage, buy a house. Get a job, save a little, apply for a mortgage.
Have you tried working harder? Have you tried working harder? Have you tried working harder?
Get a second job, get some roommates, rent a house. Realize the only generation that's going to fix this is yours, and start building.
Bitcoin was created by Satoshi Nakamoto. It's an appealingly simple concept. Bitcoin is digital money that allows for secure peer-to-peer transactions on the internet without needing a central bank. Bitcoin is like digital gold. Unlike services like Venmo and PayPal, which rely on the traditional financial system for permission to transfer money and on existing debit and credit accounts, Bitcoin is decentralized, meaning any two people anywhere in the world can send Bitcoin to each other without the involvement of a bank, government, or other institution. Every transaction involving Bitcoin is tracked on the blockchain, which is similar to a bank's ledger or a log of customer funds going in and out of the bank. In simple terms, it's a record of every transaction ever made using Bitcoin. Unlike a bank's ledger, the Bitcoin blockchain is distributed across the entire network. No company, country, or third party is in control of it, and anyone can become a part of that network. There will only ever be 21 million Bitcoin. This is digital money that cannot be inflated or manipulated in any way. When Brian Armstrong, co-founder and CEO of Coinbase, read the Bitcoin white paper in 2010, he said maybe this could be the key to bring more economic freedom to the world. So it became Coinbase's mission. Like the internet was created to transfer information, the Bitcoin network was designed to transfer value. He imagined a world where anyone with a smartphone could have access to sound money and financial services where every payment could be as fast, cheap, and global as sending an email. This idea is why he founded Coinbase, with a mission of building an open financial system for the world. Crypto economy is native to the internet. With the crypto economy growing, Coinbase grew with it. Now, Coinbase supports over 90 crypto assets. Today, Coinbase is a trusted platform. Coinbase's mission is to increase economic freedom in the world. Higher economic freedom helps create the kind of societies that we all aspire to live in. Coinbase has 3 different customer groups. Number 1, individual retail user customers seeking to develop or trade crypto assets and engage in on-chain activities. Number 2, institutions, businesses that include market makers, asset managers, hedge funds, banks, registered investment advisors, payment platforms, and public and private corporations. Number 3, developers, creators, crypto asset issuers, organizations, and financial institutions and other groups building decentralized protocols, applications, products, or other services on-chain. How does Coinbase make money? Selling their trading products. Trading is the primary source of their transaction revenue and is driven by consumer and institutional customers. Coinbase generates fees from consumers trading on their platform, including through volume-based transaction fees and a spread depending on the type of trade. They also offer a subscription product for consumers trading on the platform. Coinbase has their ecosystem products like stablecoin, staking, financing, Coinbase Wallet, Developer Suite, and Custody. Coinbase charges institutions a separate fee based on the total assets stored in custody on their platform. For example, they serve as a custodian for several Bitcoin ETF issuers. In January 2024, the SEC approved 11 spot Bitcoin ETF applications, 8 of which are partnered with Coinbase. Coinbase is a trusted crypto platform. They place great importance on safeguarding crypto assets. When customers use their platform, their assets remain their assets. Coinbase holds their customers' assets one-to-one at all times, which means Coinbase does not lend or reuse customers' assets, and do not act on customers' assets or engage in fractional reserve banking with respect to customer assets without the customer's consent. Coinbase safeguard crypto assets using proprietary technology and operational processes. Coinbase has worked hard to safeguard their customers' crypto assets and their own crypto assets for investment and operational purposes with legal and operational protections. The crypto economy is highly innovative, rapidly evolving, and characterized by healthy competition. We have to look into the financials of Coinbase. This is a company that has growth revenue in the triple digits recently, like Nvidia. It's traded at a PE of 27 and a forward PE of 36. It has a gross margin of 86% and $7 billion of cash on hand with a net cash position of $2.7 billion. Based on the financial, I don't see any real competition in the space. I think Coinbase is the Bitcoin of the crypto exchanges, the alpha dog in the space. I will keep buying this waterfall crash, as now I have a better understanding and conviction to hold my Coinbase stock. Are you interested in Coinbase stock or Bitcoin? Let me know in the comment section below.